So our next topic is your corporate taxation or your tax on your corporation. So first, we need to define what is a corporation. So whenever we see corporation under the tax code, it includes your partnerships, no matter how created or organized, joint stock companies, your joint accounts or associations, insurance companies, but does not include general professional partnerships. Why? Because a GPP is considered exempt. Also, it does not include joint venture or consortium formed for the purpose of construction projects or engaging in petroleum, coal, or geothermal and other energy operations pursuant to an agreement with the government. So if ever that is construction project, petroleum coal, you already learned before that particular joint venture is exempt. So what are those construction projects? So long as they are registered under your Philippine Construction Accreditation Board or PCAB of DTI. Also, for your coal, petroleum, or geothermal operations, they are considered exempt joint ventures. And GPP is also exempt for corporate taxation. So as a rule, therefore, what are non-taxable corporations? We have your GPP, we have your joint venture or consortium. And if we go back to our earlier discussions relating to the different taxpayers or income taxpayers, a co-ownership eco-ownership is considered exempt, right? And it is considered exempt so long as it is merely for preservation. Merely for preservation, it is considered exempt. Next, if that is estate and trust, it can also be considered exempted. Normally, if that is considered exempted in your extrajudicial estates. So what are then included in your corporation? So it includes your partnerships, meaning a business partnership. We also have your joint stock companies. We have your cuentas and participación, your joint accounts or joint ventures. Also, we have your different types of associations. So those are corporations. And your exempt GPP, joint venture, you have your co-ownership for preservation and exempted estates and trusts. So exempt corporations again, aside from your exempt corporations, as provided earlier on the definition of a corporation, we also have other exempt corporations. First, we have your government agencies and instrumentalities. We have your GOCCs such as your GSIS, SSS, PhilHealth, Pag-ibig, and local water districts. We also have your cooperatives, so members only, exempt with non-members, normally taxable, and other corporations under Section 30 of your NIRC. What is your other corporations under Section 30? Those are your different non-stock, non-profit entity. And what is the type of exemption on this? It is only a qualified exemption. So what do we mean by qualified exemption? You need to determine whether it is related or unrelated. You need to determine whether it is related or unrelated. If ever it is related, it is considered exempt. But for unrelated, it is considered taxable depending on the corporate income tax rate. For corporations, the tax scheme is very easy to understand. If it's subject to final tax, then final tax. Final tax on passive income. If not, then it is subject to the rules under your corporate tax rate. Corporate tax rate. So what is the corporate tax rate? It depends on the type of corporation, either domestic, resident foreign corporation, or non-resident foreign corporation. So what are the classes of corporate taxpayers? We already started it earlier in the previous slide. A corporate taxpayer is either a domestic corporation, resident foreign corporation, and a non-resident foreign corporation. For domestic corporation, they are taxed within and without. And the rate is 25% as a rule. While for resident foreign corporation, they are only taxed within at a rate of 25% of taxable income. Why? Domestic and resident foreign follows your net income taxation. While for NRFC, they are only taxed within, however, at gross income, because it follows gross income taxation. So I hope you still remember the different schemes, whether it is net income or gross income. So for domestic and resident foreign, they are taxed at net income, meaning their income less the deductions. While for NRFC, it is taxed at gross income, Now, let's learn and look into the different rates for domestic corporation. So for domestic corporation as a rule, for domestic corporation, it is taxed at 25%. Okay? The tax of a corporation is 25% on income from all sources as a rule. However, it can be subjected to MCIT beginning in the fourth taxable year. Beginning in the fourth taxable year. So what is that fourth taxable year? That fourth taxable year generally is X plus 4. X plus 4. So there you can only be subjected to MCIT beginning your fourth taxable year. So X plus 4. How does it work? How does it work? Only if ever your MCIT is greater than your RCIT. What is MCIT? The minimum corporate income tax. Is greater than your RCIT. What is your RCIT? It depends. If that is a domestic corporation, we said as a rule 25%. If proprietary educational institution, nonprofit hospitals, 10%. For MSMEs, it is 20%. So if the MCIT is greater, then you need to pay MCIT. But question, when will you start? The timing is X plus 4. Your year of operation, start of your year operation plus 4. And what will happen to your excess? Your excess MCIT will be credited on your immediately succeeding taxable year. And actually, you can credit this one for the next 3 years. Okay? The excess of MCIT over RCIT can be immediately credit on the next 3 taxable years. Okay? Tax credit for the next 3 years. So MCIT, when to start? It is X plus 4. How? If ever MCIT is greater than RCIT. What is the treatment for the excess? It is a tax credit for the next 3 years. Okay, so let's look now again on the rates. For net income on all sources, if that is a regular corporation, 25%. But what is the treatment for other domestic corporation? If that is MSME, 20%. And when can we say again that a corporation is an MSME? A corporation is considered MSME or subject to a lower tax rate if ever it is it has only an asset which not exceeds 100 million, excluding land, and if ever the net taxable income does not exceed 5 million. So less than or equal to 5 million. Asset is less than 100 million. So normally this is more of a test of net taxable income. So for domestic corporation, therefore, if ever MSME, our rate is 20%. If not MSME, meaning a large corporate taxpayer, we use 25%. And this is subject to MCIT when X plus 4. Now let's go to your proprietary educational institution and nonprofit hospitals. So here, under your non-proprietary educational institution and non-profit hospitals, they are taxed at a lower rate. So from July 1, 2020 to June 30, 2023, the rate was 1%. But now, July 1, 2023 onwards, the rate is 10%. And take note, if the gross income from unrelated business and other activities does not exceed 50%, then you will use a lower rate. But if exceeds, then you use the proper rate. Okay, so let's look at it. So we have here private, we have NPO, and we have government. We look into the school and the hospital. So what is subject to 1% or 10%? Proprietary educational institution, meaning a private. So this can be 1% or 10%. How about for hospital? For hospital, only non-profit hospital. So for a non-profit hospital, that is 1% or 10%. So what happens to a school that is considered an MPO? We said normally NPOs are exempt, government are considered exempt. Therefore, both for government, for school and school and hospital exempt, NPO for school exempt, hospital 1% or 10%. While for private hospital, it is subject to either 25% or 20% rate. When is it subject to 25 or 20% rate? Depending whether MSME, then 20%. Large, then use 25%. Okay? So do not forget the rules for your school and hospital that is considered as a domestic corporation. Furthermore, we have the predominance test. What is that predominance test? That at least their unrelated activity should not exceed 50%. Okay? So this is again subject to predominance. What is predominance? That the unrelated does not exceed 50%. If it exceed, then taxable using the original rate. If it does not exceed, then taxable to either 1% or 10%. Take note, when 1% depending on the date, when 10% depending on the date. 1% from July 1, 2020 to June 30, 2023. From July 1, 2023 onwards is now 10%. MCIT from July 1, 2020 to June 30, 2023, 1%. While for July 2023 onwards, it's now 2%. So for domestic, just remember as a rule, general tax rate, either 25 or 20. Exception to the rule, proprietary educational institution and non-profit hospitals, 1% or 10%, depending on the date. 10% starting July 1, 2023. And both will be subjected to RCIT. What is the RCIT? The RCIT both is subject to MCIT, by the way. MCIT is 1% up to June 30, 2023, 2% from July 1, 2023. That's for domestic corporation. Now let's go to your resident foreign corporation. For a resident foreign corporation, the tax rate generally is 25%. And again, it is subject to MCIT of 1%. What particular corporation of a resident foreign is subject to another rate? That is your um international courier. When we say international courier, that can be a courier whether air or shipping, whether air or shipping. So you will only tax it on their gross Philippine billings, meaning if ever it is an outgoing flight. So for example, we have Air Asia. Air Asia. Air Asia is not really a domestic corporation. It is a foreign corporation. However, it established a branch here in the Philippines. That particular Air Asia, if ever it has an outgoing flight, it is subject to 2.5%. But take note, look into the rules of transshipment and layover. For transshipment, you only include up to the point of transshipment. So for example, Air Asia, okay, Air Asia. From Philippines, transshipment or go to Korea, and Korea to Canada. So your gross Philippine billings here is only up to the point of transshipment. So that is up to Philippines to Korea. You cannot tax already Korea to Canada. Furthermore, if there is a layover, what is a layover? From a foreign country, let's say Korea to Philippines, and then going to Taiwan, let's say. Korea to Philippines to Taiwan. So this is a layover, meaning it did not depart from the Philippines. However, it laid over here in the Philippines. So the question is, can we tax Philippines to Taiwan? Can we tax the transfer of flight from Philippines to Taiwan? The rule is, if ever the layover is less than 48 hour, then it is considered exempt. If more than, okay, so more than 48, it is now considered taxable. Okay, again, gross Philippine billings are any flights or any carriage outside or coming from the Philippines. If ever it's coming from the Philippines, taxable at 2.5%. But what if there is a transshipment? If there's a transshipment, you only include up to the first point. So from Philippines to Korea, you include, while Korea to Canada, not anymore. Next, if there's a layover, if Korea going to Philippines, going to Taiwan, you cannot tax the Philippines to Taiwan. Why? Because they are only considered as transient visitors. As transient visitors, they cannot be taxed. However, if they will stay here in the Philippines for more than 48 hours, they become now taxable. If they become now taxable. Okay? So the special tax here is only your international career. So as a rule, general rule, for RFC, 25%, except your international couriers. International couriers is subject at 2.5% corporate tax rate. Last, we have your non-resident foreign corporation. So for a non-resident foreign corporation, um, we have here a tax rate of 25% on their gross income. Take note, on their gross income. However, we have special non-resident foreign corporations. If ever, we have owners of vessels, 4.5%, aircraft, 7.5%. Non-resident cinematographic films, 25%. Actually, you don't remember cinematographic film. If that is NRFC, the general rule is 25%. So regardless whether cinematographic film now or lesser of or distributor of cinematographic film, it's still 25%. The only exception is a vessel or an aircraft. So a non-resident now rents its owner or vessel, rent it out here in the Philippines. The vessel or the aircraft, the rate is 4.5%, while aircraft is 7.5%. This is quite easy to remember. Vessel, nasa tubig kasi, mas mababa. Aircraft, nasa taas, mas mataas. 4.5, yung vessel kasi nasa baba. Nasa taas ang aircraft, kaya 7.5%. And take note, there's no MCIT for a non-resident foreign corporation. Okay, so let's review the rules. Let's review the rules. For domestic corporation, the general rule is that it is subject to 25% tax rate, net income taxation. And then we have your proprietary educational institution or a non-profit hospital. It is either subject to 1% or 10% rate. Furthermore, we have your MSMEs that can be subjected to 20% rate and subject to MCIT of either 1% or 2%, again, depending on the date. Next, we have your resident foreign corporation. It is subject to 25% net income taxation. But we have an exemption. We have your international couriers, whether it is air or shipping. So 2.5%. Now, it is again or can be subjected to MCIT. NRFC, and RFC, as a rule, subject to 25% gross income taxation. What are the special rules? We have your vessels and aircraft. For vessels, the rate is 4.5. Aircraft, the rate is 7.5. And no MCIT. No MCAT. By the way, if ever you still meet OBUs or ROHQ before, they are subject to 10%. They are considered RFC, right? 10%. But now, they are now subject to 25% tax rate. So their tax rate before, or special tax rates, was already removed. They are now subject to 25% tax rate. Again, 25% net income taxation DC, RFC, 25% net income taxation. And RFC, 25% gross income taxation. Just remember the exceptions on the rules. For educational institutions, for private hospitals, MSMEs, international couriers, vessels, and aircraft. For cinematography, do not memorize it already because it has the same rate already as to your NRFC, which is 25%. Last, tax filing. Sorry. For tax filing, it can be 1702Q for quarterly and 1702RT for regular taxation. So 1702Q is 60 days following the close of each quarter, while 1702RT is 15th day of the fourth month. 15th day of the fourth month. By the way, we have other 1702. We have 1702EX if ever it is exempt, purely exempt. We also have 1702MX that is special rate. So a mixed combination or a special rate. And then we have 1702RT, which is now your regular rate. And if ever you are using OSD, then you can use 1702PT. So if ever, exempt EX, special rate MX, regular rate RT, which is given here, and then PTOSD. Same due date, 15th day of the fourth month after the close of the taxable year. Therefore, here guys, for corporation, again, it's only proper for you to remember the different rates and how do you tax it, whether within, without, whether net income or gross income. So that's it for corporate taxation.